So everyone, welcome to our event. This is done with the CVA. So thank you very much for being here. Welcome to our wonderful offices at Gen2. For those of you who have been here before, welcome back. Those who are new, come and talk to us after the event, and we'll give you a bit more information about what we do as a business and the clients that we kind of talk to. But first, I'll hand it over to the CVA.
Hi everybody, my name is Max. I'm one of the board members of the Crypto Valley Association, CVA. If you have not heard about us, we are an association, an ecosystem for the crypto industry, the blockchain companies, and bringing together people at events like this one today, at our main events, the Crypto Valley Conference or the Web3 Banking event. And we are not only bringing people together, we are also representing the industry in the political and regulatory environment. We are trying to really promote collaboration between different industries and different countries. But yeah, most of all and most fun of it is to have events like today. Gen2, thanks a lot for hosting this event. Gen2 joined us only this year, but this is already the second exciting event. Really glad to be here, really cool to see so many people. And well, if you are not yet a member of the Crypto Valley Association, please scan the QR code over here or over there and join us. Would be great.
Enjoy. Love the overt pitch. It's always good. Please come and join us. Yeah.
Enjoy.
Cool. So a bit about what Gen2 does before we start, because I have to do that and I want to do that. We are a securitization firm, so we take care of the SPVs, the lifecycle management, the issuance of a Swiss ISIN. We've been doing it for about 7 years now. We have about $6.5 billion assets under service, which means we've done a lot of work. We've done the tokenization before it became a thing, back when it was an STO, a security token, as opposed to an RWA now, and next year the name will change again. We've done a lot of that kind of stuff. We've done private markets, public markets. We've done wine. We've done assets like art funds. We've done a lot of cool things, and we have clients here as well, and a lot of builders in the space. So what we're doing now is we're going to have a bit of an end-of-year kind of event about what's happening in crypto and what's going to happen, hopefully, with 2026. I'm normally on the panels, but this time around, I'm going to be moderating, so I'll try not to talk a lot, but that's going to be hard for me to do. So I have a couple of people telling me to shut the hell up, so I will do that. But I will introduce my panel. First of all, we have Anne-Lorainne Mognetti from MME. Then we have Ronald Richter from Bitwise. Then we have Matthias from Ogligate, whom we know very, very well. I'll let these guys give a quick intro about what they do, and then we can go from there.
Thanks, Mark. So good evening, good afternoon. I don't know really well now with this time of the year. So my name is Anne-Lorainne Mognetti. I'm a legal associate at MME, and I work in the blockchain and the fintech team. And with my French qualification in my toolkit, I founded the MiCA project at MME so that we could also help our clients to navigate the Swiss and EU seas in this very evolutive regulatory framework. And I'm really looking forward to the conversation. So thank you, Mark, for the invitation.
Sure.
Thank you. Good evening. Ronald from Bitwise. For those who don't know Bitwise, we are an asset manager specialized in crypto. We do primarily today ETPs and ETFs. That's our main core of our business right now. I will get it, sorry. Yep. And we do also other stuff. We have institutional staking business in London, and we also run some into doesn't work well. And what I am doing, I'm responsible for French-speaking regions on the sales side, Switzerland in its entirety included. So that's it. Thank you for having me tonight.
Hello, good evening. My name is Matthias. I run a company called Ogligate. We are an on-chain capital markets infrastructure. So we enable issuers to issue bonds, structured products, and other tokenized products directly as tokens on-chain. So think of Gen2 like the wrapper and us as the rails on-chain.
Absolutely. So it's always very difficult to find people who are building in this space and are doing it very well. So I like to think of these guys as the builders, the innovators who are actually contributing to the space and making it better. So there'll be 20 minutes of maybe Q&A. Well, first my Q&A, and then your Q&A will take. My Q&A takes precedence over yours. Okay, that's how it's going to work. Okay, so if we look at what's happened this year with what's happening in banking, ETFs have come out. Obviously, that's a big play this year with BlackRock doing really well. Staked ETFs. FalconX bought 21 shares. So we got TradFi companies moving into the crypto space. Crypto companies moving into the TradFi space. JP Morgan doing asset-backed loans now. Okay, so they're giving loans against BTC. This never happened before. This is BTC-backed loans by JP Morgan. It's a GSIB, right? It's a globally systematically important bank. They're making these loans. So where is the demand, though? If I can ask specifically for Ronald and for Matthias, where is the demand now? What is happening in the space? Where is the demand? Is it vanilla products? Is it complex products? Is it yield products? I mean, you're a structured products, debt capital markets person, right? So,
yeah, I think what we've seen the last 12 months or so, I mean, 2024 was all about, let's say, TradFi going crypto with like crypto ETFs, etc., right? That coming in. But 2025 was all about TradFi going DeFi, right? So that actually traditional players like BlackRock, like Franklin Templeton started tokenizing simple products, money market funds, right? Yield-bearing tokens, right? Things like that, and bringing it into the crypto ecosystem, the DeFi ecosystem, making traditional products accessible in the DeFi ecosystem, what you called real-world assets before. And I think we've seen a huge sort of, J-curve on these kind of assets. If you go to real-world assets, RWA.xyz, you really see, I just showed it to a friend yesterday at lunch. He asked me, oh, is it now coming? I'm like, yeah, it's kind of coming. Went from like 2 billion to 20 billion within a year, right? So it is a massive growth. And what's driving this growth is relatively simple products still. Tokenized money market funds used as collateral then for looping strategies and funky stuff in DeFi. But the base primitive is something simple. So we started with payments, currencies, cryptocurrencies, then payments as in like stable coins. That was a huge thing. Now it's going into like yield-bearing assets, but like low end of the risk curve. And I think what we'll see, and that's then the prediction for 2026, is we're moving out the risk curve because rates are going to come down. Money market funds are not going to be super interesting anymore once Trump hires his favorite Fed person. And then, people are chasing yield. And that's what's going to happen next year. And I think that's going to be great for us because we're sort of one notch further out on sort of the private credit side, 8 to 12% yield product. So I think that's coming, but that's not where the main adoption was in 2025. It was still on the simple money market funds, in my view.
Okay. Ronald?
Matthias, thanks. You've said a lot already on that side. I obviously agree. And the figure you mentioned, I had 18 billion in mind of tokenized assets. So it's 20, great, but it's still small. And it's great growth, but it's in the wide scheme of things, it remains a small number. And if you look at the crypto sector or industry, it's still small too. And what we have seen, obviously, since 2024 is a huge growth, and we had the ETFs, and it depends also where you look at. In the US, there is a big growth, and there is still a lot of demand, and I think from there, for 2026, you're going to see continuation of the institutional demand. What we are seeing is Wells Fargo, bigger banks, Goldman Sachs, and others who are only now implementing allocations to ETPs and ETFs, or ETFs in the US, and no one has really allocated yet. They're not of zero, so you have to start there first, and to get to that, what BlackRock is doing today in their mandates, their portfolio mandates. So they put 2 or 3% of Bitcoin in their portfolio, so they're doing it. The others are not all doing it. So this still needs to happen. IRAs in the US are going through the due diligence on the ETF providers. That takes time. It's going through the pipelines. And once this demand is actually going through, we're going to see even more flows, I guess. And you have DATs that have been quite prevalent this year. And you've seen what Michael Saylor has done, and many others have followed. Have tried to follow at least, and some will see with what results. You have some good examples in, obviously there is a Japanese, there is Metaplanet. In France, Capital B is trying to replicate this, and now to even evolve into something that is where where the Bitcoin is put to work, so some yielding strategies. So that is interesting to see the evolution of those DATs, because they will have to. Too many of those have launched too late, and if we have a price action that like we have right now, there might be some pressure on those models. That's what. But I think, and then if we come back to Europe, and what I'm personally seeing a lot is it's still, the market is still very fragmented. Although we had these products for the last 5 years, way longer than in the US, demand is still scarce. If you look at the entire business in Europe, it's not as big as the US. It's more conservative. Market is fragmented. Different rules. The UK has just only a week or two ago, no, a week ago, that was 8th of October, it's a bit more than 2 weeks, can't count time anymore, open up to crypto ETPs, finally, after 3 or 4 years of ban, which made no sense. You could buy on Revolut your Bitcoin, but you couldn't buy an ETP that is in a regulated framework, so that paradox is now no longer exists. France is working on it as we speak, so there is still that's for 2026. I think, again, if the demand follows through, which I see from retail, asking private bankers, CGPs, independent wealth managers, and etc. to allocate to crypto, then it's going to be very positive. So there are still a lot of people who need to get off zero, and if to talk closer to home here, Swiss banks are also haven't embraced fully either. So there's a lot that needs to happen for. You see banks. Obviously, you have some banks here that are pretty advanced. But go to. Do you think that Pictet has a lot of? They have an effort. They have an internal crypto club. There are some, and in many banks you have initiatives, internal initiatives, but the executive and the compliance is blocking. So it's
really just vanilla products at the moment.
It's vanilla. Let's
ETFs, ETPs. These are really basic
things. And that's because it's the equity. It's a proxy. You can do that. And main focus in Europe: 80% BTC, ETH, and a bit of Solana, maybe XRP. But yeah, I know.
Can I ask something to the audience? How many people in here know what a DAT is? Hands up. Okay, just to gauge, sort of like we need to know like what the audience is like to, I think we're using a bit too many.
Explain what that means.
Well, you do it.
That's now a way to. There are some companies who have. So it's a digital asset treasury. That's the definition of a DAT. Some companies like Strategy, who was MicroStrategy from Michael Saylor, has decided to create to focus purely its business on putting Bitcoin into its treasury and to become a Bitcoin treasury company. Some other companies have gone on the bandwagon, seeing that it was hyped, and made their stock price rise very quickly. So some have jumped on that bandwagon for the wrong reasons. But anyway, some it works or it doesn't work. But the idea is to have a company who is storing in their treasury some Bitcoin, and because of the characteristics of Bitcoin, it's now a macro asset. And the idea is that it's a way of diversifying your asset allocation.
I think it's an excellent definition. I think the key angle for many people is access, right? Because the NASDAQ or whatever stock exchange listed equity that anyone can buy, right? Whereas, as you just explained, right? So Bitcoin, even in the UK, is hard to buy, on like traditional rails, right? So you can just buy it off on a FTSE or NASDAQ company, their shares, and you get a proxy, right? So that's like a new phenomenon, and it's been really the year of the DATs, but already decline again. I guess we've already come to that point.
But then you have credit companies getting rated now, right? So what's the rating of Saylor's company? B-, junk status. And that's for a reason, because the opco doesn't make any money now compared to what's happening there, right? So let's quickly move on, because a couple of more topics that I want to get to, and one is about, so when we're looking at institutional demand, what is non-negotiable for them to look at the space, right? So for Ronald, it means talk about custody, talk about yield, and Anne-Lorainne, I would love you to talk about regs as well. What does compliance look like in this space? Because that's hugely important.
Yeah, of course. And I think when we talk about the demand, like we always have to look at both sides, like the demand and the supply. And right now, what we can really see is that both actually don't really speak the same language right now. Because, for example, if you go back to FINMA's data for 2023, you can see that there is only approximately 40 banks and security firms that are really involved into crypto asset services. And
Only 40? That's a lot.
yeah, but I mean, it's very, that's what I was going to say.
Yeah.
It's very good for Switzerland and for us.
Amazing.
And I mean, for the crypto enthusiasts that we are here, maybe it's not yet enough. But that's where actually the number, you should not just look at the number, you should also look at the quality in a way. Because when you look at the service they are actually providing, it's mostly custody and trading. And so they really actually stick to what they know. And the thing is that you could ask yourself why actually they are sticking to this part, and it's because they have already an existing framework in which they have to fold crypto asset, and that's always actually a bit the tricky part. I mean, Richard just explained about like Swiss banks, they are quite innovative about that, and that's true. But still, for example, we have a lot of questions from traditional banks coming to us, can ask us, hey, can I do actually a Lombard credits on crypto asset? And you're like, yeah, maybe, but you need to have a look actually if it is not going to trigger any raise in your capital requirement. Then it will be, oh, actually, I would like to offer more custody. Yeah, why not? But actually, I would like to outsource that, but there is this whole guidelines also about outsourcing for the banks where they are still responsible for the service provider they take, and so they have to be very, delicate in who they choose and be able actually to list the risk and benefit of having this service provider completing this notion. And I mean, this whole, framework that needs to be adjusted, it's really well replicated in MiCA, where sometimes you hear actually people say MiCA was drafted for the financial institution. It's true in a way because they don't need to do, this additional license, and they just need like notify to the regulator 40 days in advance before they give their services. But still, like they need to explain, okay, how am I going to segregate funds? What are my capital requirements? How am I going to adapt my ICT system and AML system? And for example, when you have DeFi speaking with a bank, it's usually like two people, they don't speak the same language because you have one who is like out of AML and the other one who is like, me, I need to know everything, and even like the color of your bedroom. So, I mean, that's totally two different worlds. And the thing is that with MiCA and all this regulation coming into place, I think we have actors that are more and more speaking the same language. And so I think also it will, spur also the demand and offer to align way more. And I think we will see more alignment in 2026 for that part.
Globally or?
I mean, Europe-wise, maybe.
Europe-wise.
Yes.
Fair enough. Ronald?
I'll be short. I think, yeah, you're right. To have a proper, broader institution adoption, you need obviously regulation to allow access, which is slowly happening. And talking for Europe, it is happening. Obviously, it's happening in the US. We need that. We need everyone on board. And we also know that I'm talking for Europe, for instance, with ETPs or ETCs, what they really are. It is still complicated for banks just to how to look and how to do due diligence on these products, because first of all they're not used to the structure itself, so they have to look at that. So it's not such a complicated structure. But then there is the entire service providers issue. How do we look at these guys? These are more crypto native companies generally for the time being. You see now more and more traditional players coming into play. France, you have Société Générale Forge, who's trying to push to do, and Cassis is also doing it. But that generally for investors, they need to do the entire work and they don't know how to do it, what to look at, what questions to ask, etc. So once we have passed that hurdle of educational, that educational hurdle, it will get much faster and much better. But we need regulation, we need knowledge, we need solid players in the field. Otherwise, the big guys will never look at this.
So it feels like we're still at the bottom part of the J curve before we get the
what we call it early institutional adoption.
Yeah. The Ramp down before the ramp up. That's what
So it's a bit further down, but it's too early days on real the big
Okay.
guys coming in.
Let's move on to asset management, because obviously at Gen2 we speak to a lot of multifamily offices, hedge funds that want to securitize their assets. What does it mean to be an asset manager in this space now? Because typically what happens in our world, in TradFi world, is that we replicate what we can see in TradFi and put it on chain or put it in crypto, because we can, right? So we look at the basis trade, we look at momentum, we look at mean reversion, we look at any kind of quant trading strategy, and most people here probably know a lot of those strategies. Is that what's happening now in crypto and in DeFi as well? We're just moving over financialization of still the same stuff we've done in TradFi for the last 50, 60 years. Maybe for Matthias. He's the debt capital markets guy. I'm going to annoy the hell out of him.
Look, I mean, I think we've started, as I said, like, where have we seen adoption, right? One is really just spot crypto, right? That's what you guys are doing with the ETFs. Then we've seen, this is like an access game, right? Getting access to cryptocurrencies. Then we've seen, what we're doing is tokenized actual securities, right? So these don't need to have a link to cryptocurrencies. And in that space, it's been relatively simple products, right? As I said before, money market funds, etc. We're, let's say, one notch further out the curve. So what we're doing is basically tokenized bond funds in a way, right? What we're now sort of, enabling asset managers to create their own tokenized strategies, right? But of course, like you have sort of that. You have like two worlds. So you have this institutional world where it's still very simple products, but about access. And then you have the crypto native DeFi world where it's much funkier stuff than we've ever imagined on like any structured product we're trading for, right? So like looping, highly leveraged strategies, etc. And that's sort of converging now. That's the interesting thing, because a lot of these primitives like money market funds or yield-bearing assets from real-world assets are used for as collateral on DeFi trading strategies. And then you can lend against it. So once you have them tokenized in the DeFi ecosystem, you can borrow against it, right, on the lending borrowing markets in DeFi. And then you can use the proceeds. So it's basically Lombard lending, right? But you can leverage up, right? You can leverage up, and you don't need a central counterparty for this, like a bank. You can actually do it peer-to-peer with DeFi smart contracts, right? And that's sort of the interesting bit now, that this sort of what's called the degen world, the degenerate crypto people who are like seeking, 30, 40, 50, 100% yields, right? Or all of a sudden starting to use very traditional type of assets like a BlackRock or Franklin Templeton or Benji token as primitives for their strategies. So I think the two things are actually converging now.
I think a lot of it's also about leverage. Everyone in crypto native land wants leverage, and they want to borrow against something that's low vol, whether it be tokenized equities, tokenized real estate, or whatever the case is. All right, let's move into the reg space. I know people don't want to talk about this, but it's a really important space to be in, especially because we're here, right? So everyone, when we do panels across the world, what happens is people always don't like their home markets. They tend to crap on those markets, saying, oh, we move too slowly here. Given what's happening in the US, right? Trump, love him or hate him, he's doing some incredible things for our little ecosystem. He may be bad for humanity, but he's very good for our little ecosystem. So given what's happening with the SEC, where you've got Genius Act versus Clarity Act, we know exactly what's happening with a stablecoin. What's happening here in Switzerland? How fast are we moving?
Actually, the US are just catching us up in this.
Catching us up?
Yes, in a way, because I mean, Europe and specifically, Switzerland was always a very first mover in this space. Like FINMA in 2018 was one of the first to have these ICO guidelines, very clear, function bases, bring a lot of legal security. And then Mika came on stage a bit later, 2023. But what is interesting is actually how we did it, because we did it a bit in a different manner. Like, as always, the European people like to create something specific for like a specific purpose, like put their mind into it. Whereas like, I think what was very interesting from the Swiss perspective is that we just managed actually to fold in a very pragmatic manner the crypto asset object into our existing framework, which made it more like easily to read for people who were already actually in the evolving in the industry. So I think actually what's going to be very interesting as the next chapter is going to be how Switzerland and the EU are going to be able to fine-tune quickly their framework in order, to not to keep their first mover advantage and not to fall back and still remain in the competition.
So there's a lot happening in the stablecoin space here too, right, in Switzerland. Can you talk about that?
Yeah, of course. So because in the past, so no one wants to talk about RegTech. In the university, no one wants to do history of law. I have to do a little bit here. It's just like in the past in Switzerland, when we were actually wanted to issue a stablecoin, and that is still the case today because we just have a consultation for now. But you needed like to have this very usual fashionable dual system, which was SRO membership, because we consider this one-to-one redemption claim back token as a deposit on the banking law, so triggering AML and banking law. So, but you could not circumvent, wrong term. You could actually make your way around. Says the lawyer, I just show you. Whoops. So you could just make your way around the bank guarantee. I mean, everything is in the exemption and in the law. I just want to make sure. You could make your way around the bank license by having either a bank guarantee, or, for example, if you had a very small level of volume, for example, 1 million, which was never the case for stablecoin, but still. So you had this duo that was happening in the past, and now what is very interesting is that in July last year, FINMA published these horrible guidelines where actually we did not just wanted to have the KYC of at the redemption and insurance time, but also through the whole time of the stablecoin. So at this point, all our crypto stablecoin project just told us, well, sorry, we're leaving. Fair point. The only one remaining actually were the one where stablecoin was used in a very small network, because that it would make sense because they would know actually who was using the stablecoin in their network. And maybe learning and seeing what was happening in the EU, because in the EU you had like this for under MiCA, if you want to issue, let's say, something like a Circle or Tether, you need like a EMI, so e-money license, so to be an e-money institution. Plus, you need to have this white paper. And then came a bit later the Genius Act with a bit the same idea, like you need to be a bank or a money transmitter. So learning from that, I think, and having also in mind that, and that's where also Switzerland is very pragmatic, I think, because I think in the proposal they did this year where they say, you know what, now if you want to issue a stablecoin, you will need this payment institution license, which is very close actually to a banking license, e-money license actually, plus you will need actually a white paper. They are preparing actually the territory for equivalency. I think they want actually to be able to say to Europe or to the US, well, actually we are something a bit similar. What do you think? Then, I mean, it's a whole political also discussion, and that we cannot really imagine. I mean, with a Trump, it's maybe difficult to discuss. But I mean, for example, and in the EU, for example, there is really this equivalency regime that exists, and it will be the same. I mean, it's just in the end will be political discussion, but I think it's also it will just also be so benefiting for the whole ecosystem, because it will mean that if I have something in Switzerland, then I can actually address what people were actually asking. I can address EU territory and the US, which would be amazing, and not having to have an e-money license almost everywhere, which is like a huge cost. It's like usually, like for example, we had a quote in the US recently. It was at least half a million just of legal fees. You didn't even make any money yet. So quite an endeavor if you want to go into that space. So that would be actually amazing.
This is really big for Switzerland, and I don't think people realize how big that is. And so I think we need to do a lot more Top Gun type marketing here, as opposed to just being Swiss about it. I think it's and I'm not Swiss, obviously, but I think we do a lot more of that here, so I think you'll get a lot more traction on this side. I think we're going to move on to another topic, which is DeFi. Institutions want to get in. It's a really big deal. We have conversations with clients, institutions who want to get in every week. It's a bit of a sore topic, but I'd like to see how we can do that properly. So if I could ask you, what are the biggest hurdles for institutions to get into DeFi at the moment? And I'll start with Matthias, and I'm going to go to Anne-Lorainne, and then I'm going to go to Ronald.
We don't deal with those institutions, though. I cannot get into it. No, I think you're already seeing it with again, I'm coming back to these like simple primitives, the money market funds, etc. So the big products out there from like Franklin Templeton, from BlackRock, etc. Or other like UBS did it with Singapore guys. UMint, but they also DGFT exactly. They can be used in DeFi, right? So they created securities, which then on the primary market are always going into KYC, identify parties, but the token itself is then like the stablecoin, right? Can also be transferred freely afterwards, right? On a secondary market, but when you redeem or redeem, you need to be KYC and AML checked, right? So this is basically the hybrid access. I'm not going to say circumventing, but like the access into DeFi, right? And DeFi is then the unregulated area where you can basically, you have a wallet and you can trade, right? Like you can connect to an exchange, a decentralized exchange like Uniswap or Curve, etc. And you can swap this token, which happens to be a money market fund, against another token, which might be Bitcoin or something else, right? So this is DeFi, right? This is one part of, let's say, permissionless DeFi. But then what probably you're alluding to is then what can you do in terms of actually financial activities within this permissionless ecosystem? And that's then the cool part, right? Then these assets can be used as collateral on platforms like Aave, where you can then, again, do permissionless lending and borrowing. So you're basically just connecting to a smart contract. And on the other end, you have other parties who want to borrow and you wanting to lend, for example. And then there's a market rate, which adjusts, and the collateralization ratio, which is determined. And basically, you can use this asset and really have collateral mobility and borrow and lend against it. And then you can leverage up and do things, whatever you want with it, basically, right? So going back to your question, in terms of institutions and DeFi, right? I think it's on the supply side, they're already very active, right? I don't, supplying assets then can go into DeFi. So the institutions love distribution. Whereas on the demand side, I think it might be even cannibalizing a little bit their own business model. If I think about banks who do Lombard lending, right? Sort of like that's sort of like if then your investors can do the same thing much more efficiently on Aave, like, do you really want to offer this? Question mark.
No,
There's a couple of people you can talk to about this as well.
No, I mean, I completely share your point, and it comes back a little bit even to your first question, which is like we have two sectors which still don't speak the same language, actually. And so even though we see some progress, it's still very, very early, as Richard explained earlier.
Okay, so this one's about laws, though, right? So how do we adapt our existing laws to work with DeFi? And in DLT paradigms across Europe, across the world, probably for you, this one. EU and Switzerland first. Maybe you can talk about the world if you can.
So actually, we don't really have to adapt it yet in a manner that DeFi has always been out of every regulation. Like if you look at the Genius Act, we say, okay, out. If you look at MiCA, out. If you look at Switzerland, out. The thing is that you could think, oh, okay, then it's super great, actually, like I can do a lot. But the problem is also that in that way, that the regulator in that case usually regulates more with enforcement rather than regulation. Because I think all the lawmakers are aware that it's very difficult to squeeze in DeFi into a framework, and that's why actually none of them dare really like to have a look at it yet. I mean, maybe it will evolve in the future when they will have a better understanding of what's happening in the space, but for now, I really believe we are going to stay in the same level. And so when we have actually a DeFi project that comes to us, the only things that what we do actually is that we have to just guide them with the guidelines that we have, the discussion we also have with the regulator, and that's where actually the dialogue with the regulator is very important, is that we have to guide them so that they can structure the product in such a manner that we think it is actually decentralized. Because what the regulator doesn't really like is when we tell him it's decentralized and when actually he can analyze someone or like identify someone who is actually the operator, because he has control over the tech, he has control over the governance, the majority of the governance token, and so he can say in which direction it is going. So for now on, we don't really have to adapt, but because we already have some guidelines, and we are actually that's where actually I think our services is like the most has the most value added, is because we really build with the project in a manner that it is decentralized, and we explain to them the risk if it goes into a certain direction or another.
Ronald, anything to add here, or?
No, my background in law is useless, so nothing to add.
Says the institutional guy. Okay, fair enough. So let's quickly move on to tokenization, because everyone's talking about it. I know not a lot of people are actually doing it. But first of all, can we define what tokenization actually means for people here? Anne-Lorainne, maybe you can start here.
My definition of tokenization would be taking something from the real world and translating and using it exactly like, actually your definition was really good with the wrapper. It was like taking something into your real world, wrap it, and then having the rail. And then usually you would like your rail to be a DLT ecosystem or a DLT infrastructure. Do you have other?
None. It's all about access and availability 24/7.
Yeah, so it's settlement at the end of the day.
Yes, and I think we make the distinction even more clearly, because we don't tokenize assets. Strictly speaking, we don't take existing real-world assets and represent them as a token. We actually enable, companies to issue their assets as in token form. For example, their securities, their bonds, their structured products. And I think that's where, again, the DLT Act came in. And I just wanted to do this very short analogy. You talked about history. So, why was Switzerland so early in adopting this tokenization law, this DLT Act, right? Is because, Switzerland, securities used to be stored, in a, trésor, right? In a safe underneath typically the stock exchanges, right? At the SIX and our friends there, and the Central Securities Depository in paper piles, right? And you had like registers in terms of like which banks own these stocks, right? And then all of a sudden these registers went digital, right? And Switzerland was already very early in recognizing actually, security can just be represented digitally on servers, right? On centralized servers. And then decentralized ledger technologies, DLTs, came, and the law, that's my naive understanding as a non-lawyer, was adapted in an elegant way to say, well, if this server is just one server where the digital asset, this digital security is stored, or a sufficiently decentralized ecosystem, doesn't really matter. The bond is a bond, the stock is a stock, the fund is a fund, right? So that's the beauty about the Swiss, DLT Act, that it allows you to represent these, traditional securities just as a token. So we call these like on-chain assets rather than tokenized assets, because tokenization always refers to the process of taking an existing asset, which has already gone through the laborious process of an issuance in a traditional ecosystem, T+10 settlement.
We can take care of that.
Exactly. That's what these guys do. Directly cutting out this process to actually just issuing the asset directly on chain, right? But the end result is the same. You just have the asset represented as a token, right? But yeah.
And just maybe to finish on the love declaration to Switzerland, if we want to actually like compare, the DLT regime like in the EU compared to Switzerland, like first of all, as you say, like it was very early on, and on top of it, we have this notion even in the code, like about this ledger-based security. So we even have like this notion in our code, whereas in the EU we just have a pilot act, like we just have a pilot regime. It works exactly the same, like it has the same ideas, but it's still like something which is not that has not been clarified. There has only been a few entities that has obtained like a DLT infrastructure license and things like that, and still they don't really know what's going to happen tomorrow. Whereas in Switzerland, so you have this standalone license with the DLT infrastructure license, a multilateral license, and you have this ledger-based security, which is already implemented in the code, so already has a very strong, civil law-like roots.
So we may actually see more issuance on chain in Switzerland as opposed to the Zurich Stock Exchange. Ooh. I think it could happen, right?
I mean, that's what the Swiss Stock
whole
Exchange tried with the SDX, right? Exactly, to do that in tokenized form. I think the original idea, and Tom Zeeb, who was the parent brainchild, there was his brainchild, is on our board. So the original idea was actually to just make, you know, traditional stocks that trade on the Swiss stock exchange also accessible, for example, in a tokenized form or an on-chain form, right, on the SDX, so that you have full mobility. If you want to trade on the weekend, you happen to trade the tokenized stock. If you trade and then it settles next day, like on Monday or so, into your traditional infrastructure. So you have full mobility. Fortunately, that's not exactly how it was implemented. So it was sort of a little bit of a Rohrkrepierer, how we say in German. And now, yesterday or whatever, a couple days ago, it was announced that they officially gave their, you know, stock exchange license back to the regulator, right? So they shut down, right? But actually, that's the whole idea, yes. And then, of course, you have like as many stocks as there are traditional stocks on chain, yeah.
Look, I think if you're issuing debt, I think this is the best place to do it under the DLT Act, because it's so easy to do here. Under Swiss law, which is a really big deal.
And that also means structured products,
Of
trackers,
course, the whole
everything.
thing,
Right,
private
yeah.
placements, AMC, CLNs, trackers, the whole shebang, which is amazing. Final thought before everyone wants to have more wine. So, what have you seen in 2025 that excites you about 2026 in our little ecosystem, our little world?
So easy.
Oh, cop out. I like it.
Me, I would say maybe it's the fact that for the first time we saw that regulator did not, put the task of having to deal with the crypto industry and the crypto regulation for the next year. Like we could see that more and more regulators were really like sitting at the table, due also to like the US starting to sit at the table, which is very interesting, I think. And at the same time, you could see how like it triggers also like a movement from the other jurisdiction who already had a framework to say, oh, okay, how do I stay actually in line with the competition, in line and in the competition. So I think 2026 from that aspect is going to be very interesting, because we are going to see like a lot of changes, like calls for, it's already started, for example, in Europe, like the IMF, like the Italian regulator, the Dutch regulator, like they ask ESMA for more clarity. They ask ESMA to like take over a bit more the role of being like the watchdog for the whole Europe, and not just, having that 28, like all the states, like just having 28 flavors of Mika and just having something a bit more harmonized. So for that, I think as a lawyer, it's going to be a very interesting year.
Selfishly, two things on the back of the regulation is the opening up. If I focus only for Europe, the opening up of a few countries and regulators kind of saying, okay, now you can sell this, ETPs in particular. So that is very positive, and seeing how the US are pushing forward. So if they deliver on the regulation, I think it will push other countries with them, or pull other countries with them. And then, as I was also alluding to before, we're still very early. There are still a lot of places where you go to where there is absolutely no exposure, and people are still trying to get educated and are interested in it. And the demand it's really coming from the retail, from the individuals. They want it, and they are forcing now everyone, bankers, independent asset managers, to get exposure. So everyone is now kind of having to look at it and can't ignore it anymore, and that's good for us.
So for me, it's love it or hate it. The thing that excites me about 2025, and that's going to be promising for 2026, it's the same thing, Trump and Trump. So why? Thanks to Trump, let's face it. I mean, 13 months ago, Jamie Dimon was saying, crypto is illegal and JP Morgan will never touch a public blockchain. This year, JP Morgan launched a token on a public blockchain, right? That's just unthinkable. It would have been unthinkable pre-Trump, and it's just become the reality that all the big US institutions have launched not just pilots, but actual products on the blockchain ecosystem. So that's super exciting. And I think that's driven a major adoption this year of actual real institutional adoption. And the selfish thing of 2026 is that I think thanks to Trump, rates are going to go down to zero again, which is going to make our products way more attractive relative to tokenized money market funds. So that's actually hopefully going to be very good for us.
Cool. Cool. Thank you very much, guys. I'm going to open up the Q&A. If anyone has any questions, please speak up. We'll give you the mic.
You were quite selfish with your questions, though.
Ilmar.
A quick question around the stablecoin regulation that you mentioned previously. So, what's your take on Swiss stablecoin and like the adoption of Swiss stablecoins in the next couple of years? Are there any, like, maybe you mentioned some changes coming up? Could you elaborate maybe a bit more? And yeah, when do you think it will be like publicly available for retail to just hold Swiss-based stablecoins in their wallet?
Well, first of all, like, sorry, business school kickings in. Like, I don't really think whether having a Swiss-based stablecoin is that interesting for us as a country, because we are not in the same position as the US. We don't need like to pay our external balance sheet, commercial balance sheet. Like, we actually have a strong money. We have industry in-house. So I don't really see the Swiss-based stablecoin being a thing in Switzerland. But to go back to my question, I see, however, maybe a euro or US stablecoin being something still in Switzerland. The thing is that for now, we still work under, the duo that I was explaining, which is the SRO membership plus bank guarantee. The thing is that since FINMA guidelines in 2024, when you had to identify, all the holders of the stablecoins for the lifetime, many banks didn't really want to touch this subject anymore, because it was also like a signal from FINMA that guys actually stop doing that a bit in a way. So like no banks really were not interested in coming to in giving any bank guarantee. And so now we're at a consultation phase of this new regime, where we will have the crypto institution, the payment institution license. So which is a bit like a e-money license or a banking license. It's replaced what was in the past the fintech license, which was the lighter regime for banks. But there is no cap, like in the past for fintech license, when you could only, receive deposit up to 100 million. So that's very good, because for stable coins, like if you don't have the volume, like there is no business opportunity in it. So that's the first thing. And then plus you have the white paper, because they took, I think, the inspiration from Mika. And so we have this consultation until February, then there will be further discussion. And so I think in 2 years, you will be most probably able to finally apply for the final setup, but we are still very early, in the discussion of this. So now actually that's where I think it will be very interesting, because we are actually in the process of, with like a client who has a stable coin, and we are still going to see whether unlocking this new legislation is going also to unlock the banks to give back again bank guarantee for this kind of product, knowing that there will be maybe a grandfathering period, something for the transition, which it's not very clear right now how you can transit, because there are a lot, like there's a few projects in Switzerland with stablecoin, less and less, or let's say there are, but not the most active one. And so it's going to be interesting also how FINMA is going to explain, well, how is the playbook, basically, how are you going to translate from the old world to the new world. Does that answer your question?
Yeah, so basically it will still take 2 years or so until we actually have the CHF-backed stablecoins, like basically like a USDC, but in Switzerland, like a USD CHF.
I mean, we will have the legislation to do it. Then the fact whether there will be actually someone who, we have a lot of clients actually coming and who wants to do that, so it's totally possible, and we will have actually the legislation to do that. But again, having, I think, like a Tether, like an equivalent CHF, I don't really see it. I mean, maybe, but I don't really think I don't think it's really economically, it doesn't really make much sense, I think, for Switzerland, but maybe, it's my humble opinion. I mean, maybe Matthias and Ronald, maybe you have, no?
No, but there is one, right? There's one issued around Liechtenstein already, on the Liechtenstein law, VCHF, right? So there is supply, like the question is about adoption, right, and demand, right? But I mean, in terms of like issuing securities, on chain for us, right? we typically settle them in dollars. We denominate them in dollars, some in euro, right? But there's also Swiss companies who would like to raise in Swiss franc, and we would settle in a digital Swiss franc. So it's not just, you know, the treasury thinking about, you know, how to pay off their external balance sheet, but it's also like just pure, you know, companies that want to raise Swiss franc that might, you know, issue a token denominated in Swiss franc. Yeah.
Just to add to what Anne-Lorainne said before, right now there is a public consultation going on for the new proposed law in Switzerland, and we have time until end of January to provide feedback. So the Crypto Valley Association, together with the Blockchain Federation and a bunch of other associations and organizations in Switzerland, are collectively trying to align on the feedback that we want to provide to the regulator. As of right now, the proposed law is kind of good for some elements of the crypto ecosystem, but pretty devastating for the rest of the world, especially everything that is under the SRO regime as of today. So we are really trying to bring everybody together and provide a proper proposal for what has to be changed in the new version of the law, so that FINMA and the SIF, the State Secretariat for International Finance Questions, amend their new proposal in order to address this. So everyone in here who is interested to really contribute, right now is the best time. We have already the main aligned draft with the Blockchain Federation. It was published today, but the Crypto Valley Association is still gathering input and more work on the detailed deep dive in this law proposal on how to make things better going forward. So please reach out to us if you want to contribute. If you are interested on the current state of the wording, reach out to us. It's not a secret. We really all want to bring everybody together. And there are just a few things that we need to address with the FINMA and SIF to make everything more clear. And a lot will change if all of this goes live in 2 or more years from now, but hopefully it will be a good thing.
Are there any more questions? Okay, I think we'll leave it at that. Thank you very much, guys. We'll have some wine.
Thank you.